What sort of reaction are you expecting today? Any underperformance, perhaps, in the periphery versus bunds?
Actually, look, I mean, the longer that they kind of, postpone things, I mean, we don't really see any sort of major reactions from the overall bond market. We do as we think it's a currency story. I mean, I think most of the central bank actions have really kind of had a larger impact lately on currencies versus the bond markets themselves. So we do think that it makes sense for people to be defensive, or at least positioning for some sort of dovishness from the FX perspective, maybe more as a hedge than of a view. I really don't think how much more we get from the euro unless Draghi really doesn't mention anything about October.
Yeah, I mean, you make a good point that today could actually turn out to be quite a non-event for markets. But if we look further out towards the end of the year or the start of 2018, and if and when that tapering does come, what kind of fallout do you see on global bond markets? Because the ECB, to be fair, has been quite a strong source of liquidity globally. Absolutely.
I mean, I think, we all look towards what the Fed did, but I mean, the ECB's buying program has been massive and happening in a marketplace which has not produced as many bonds as, say, for example, when the Fed was buying treasuries, the U.S. was running large deficits and there were a lot of treasuries to go around, whereas there weren't as many European government bonds, and that really forced money into other markets, in particular into the U.S. market. And so we've kind of been attached at the hip between European rates and U.S. rates. So any sort of movement higher in European rates will naturally rise up U.S. rates. And if that's happening in tandem with the Fed policy, I think that's when it really starts to stick.